Hello, Alex Cole, and welcome to this week's GoNoGo show for StockCharts TV. Thanks, everybody, for joining us. We're recording this pre-market Thursday morning, January 27th. How are you doing, Alex?
Doing okay, sir. How are you?
I'm doing fantastically well. On the road this week, but excited to get home.
Yeah, nice to see a change of scenery in the background there.
A little change of scenery. No drum set here.
No drum kit. Yeah.
What a wild week it has been for markets. Certainly intraday wild swings. We saw a lot of big reversals. Monday up a little, Tuesday down a little. If you're just looking at end of day data, you may have missed some of the excitement. But tell us a little bit about what we're looking at here with the S&P 500 index on that daily chart, Alex.
Yeah, so we just brought up the S&P on a daily. What's interesting is these really, really long bars that you see here over on the right. Like you said, we had some massive swings. Some of the other indexes, I think, were down up as much as 5% and then closed up just over 0.5%. I think that was Tuesday, but really, really big swings. The NoGo obviously strongly in place. It's been quite impressive that the bulls have been able to, push price back up to levels that were a little closer to opens or closer to previous closes. Yesterday, I was interested to see, though, that the close was a little bit lower than the open. The same thing sort of happened. We went very heavily down, but rallied, and price was all over the place, but the close was significantly lower. So we'll see what happens. I know we're set to open up 1% today, but like you've seen this week, that doesn't mean a whole lot. And typically, it seems to me that in my experience, these really volatile swings are not signs of a sort of a strong, healthy market, and they typically lean a little bit more towards bearishness.
Absolutely. And so with GoNoGo Charts, obviously you can look at this on any tradable asset, but what if we were to look at a chart of volatility like the VIX itself? How do those trends play out, and what would we see as investors if we were looking at big swings in volatility?
Yeah, so there's the VIX, just the S&P futures volatility, and you can see that we had that really strong spike in the VIX last week and into the beginning of this week. It's cooled off slightly, and we're seeing it approach the zero line on the oscillator.
Less momentum in the VIX as we're coming into the end of the week here on Thursday, January 27th. All right, Alex, on Monday, all of our subscribers received Flight Path, looking at the week ahead, commenting on some of the trends that were in place from the prior week. So let's just take a top-down perspective of the markets. Obviously, the wild swings within U.S. equities have been kind of all over the place, but there are still areas for opportunity. So walk us through a little bit of that top-down approach, starting with the sector RelMap.
Yeah, and remember, in terms of opportunity for investors, it's often about being less down than the markets, right? So we're not always sort of saying, well, there's places where you're going to make 5% this week, but if you don't lose 5%, that's pretty valuable as well. And so what you're seeing on this chart is a sector RelMap. So interestingly, the cyclical rotation still very much in place. The value play, the industrials, materials, energy, financials, all in relative go trends and actually strengthening. If you see that middle area of the chart here, you can really see that you've got staples, energy, financials, all in strong go trends now, with the blue bars really having strengthened. And so that doesn't mean that on a pure trend they're up. If you took a look at the XLF, you'll see it actually in a NoGo trend on a pure trend basis, but relative to the base index, these cyclical sectors are definitely outperforming.
Absolutely. So the areas where we really want to avoid, right? If we think about the 4 outcomes of a trade: small win, a very large win, small losses, all 3 of those absolutely fine for your investment portfolio. Those big losses are what we're trying to avoid. So if we look at the sectors that are really underperforming the index, which is also declining, underperforming a declining index means these are the garbage sectors of the market. This is not where we want to be holding assets. Let's take a look at the XLK and look at information technology.
I mean, just jumping off here, discretionary, technology, and communications. So there you go. Those are your growth sectors, and they're underperforming the market, which is severely underperforming itself. So do you want me to take a look at the XLK on its own now, Tyler?
Let's do that. Let's dive into information technology and just see how the trend has played out this week. Perhaps offering some good short opportunities if that's part of our audience's investment plan.
Absolutely. So here's the XLK. This is a longer term trend line that we've had on the weekly chart, and for a long period trend line that was broken recently. But you can see how this sector rolled over earlier into the amber go fish bars. Then it sort of retested, gave us a no-go trend continuation icon, and has plummeted since. Like the S&P, the last couple of days have sort of swung back and forth, and we see the pink no-go bar now as the GoNoGo oscillator comes off oversold conditions back into neutral. But yes, this real drop in the XLK, even more severe than what we are seeing on the S&P itself.
So those simple triggers to my eye in terms of data visualization, when we see that red circle in a no-go trend, that's when the GoNoGo oscillator has retested the zero line and was rejected, found resistance, as in momentum could not get positive. We were rejected at the zero line, went back into negative territory, and hence a trend continuation or a low risk entry. So in terms of shorting the sector, that would be an opportune time where you know that there is high probability of the trend continuing with momentum in its favor. And then, Alex, you were just saying here on Wednesday, so that's yesterday's bar, we've got a counter trend correction arrow, meaning that the oversold, the extreme oversold condition ended and momentum was rallying back towards the zero line, but still negative, maybe suggesting that there could be a little bounce in price.
Bounce or a pause, it's counter trend correction can mean sort of consolidation or sideways movement. There's some sort of disruption to the trend. Whether it'll rally a great deal will remain to be seen, but definitely it suggests that a pause in the sort of falling of prices in the short term.
Right, consolidation over price or time. That's a great point to make. All right, so we've covered some of the volatile swings in the technology sector. Let's look at a specific name. Obviously, last week Netflix took all of the headlines in terms of what was a better than expected fourth quarter earnings report, but a disappointing first quarter guidance. So again, try to wrap your head around that. The fundamental analysts of the street and sector analysts in the technology space must be really frustrated, because even if a stock like Netflix beats earnings, we don't know exactly what the mood of the crowd is going to be in reaction to that. Did they beat it by enough, and was guidance looking forward too negative to outweigh that fourth quarter performance? So we saw a 20% decline in Netflix just Friday of last week. How's that playing out for us this week, Alex?
Yeah, and of course, whether or not a company beat estimates, like you said, did it beat it enough, or has the market priced in already what they expect to happen with fundamental measures like that? And you said, tough for people to wrap their head around. I try not to wrap my head around the fundamentals and, not to bash fundamental analysis. But for me, it's always been about trying to understand price action. And I really sort of, I guess, count myself as a relatively true technician as opposed to trying to explain the price moves. I think it's always, of course, good to have a balance and to try to understand the story going on in the markets. But sometimes it doesn't make sense, and sometimes you really then need to focus on price. And Netflix is something we've been looking at. We had this trend line on, and it broke below that on an amber go fish bar and went into the no-go trend, early December. And it was sort of slowly making its way down. And we got, like you said, we highlighted on that last chart, the no-go trend continuation, which we consider a low risk entry point into a trend, because we see the trend in place, and then the oscillator gets rejected by the zero line, that sort of objective level of support or resistance. And then when it gets turned away, we get that low risk entry, telling us that momentum in this case has fallen in the direction of the trend again, sort of, negative momentum. And then, of course, that massive gap down. And it has moved, it hasn't sort of bounced from there either. It's sort of moved a little bit lower. So really bearish sentiment on Netflix. We'll expect the bottom of this gap to be resistance if it climbs up a little bit. So we'll look at what happens as Netflix moves forward.
And here I was thinking a new season of Ozark would totally, just forgive all of these sins on a fundamental basis. All right, let's keep moving. Why don't we pull up a chart of Ford Motor Company and switch out of the technology sector for a little bit? Let's look at what's been happening to auto manufacturers, particularly in this season where supply chains have been disrupted, costs of input materials and goods have been a real headwind for a lot of U.S. corporations. Let's see how the Ford Motor Company is performing.
Yeah, and the automakers are in one of those. It's interesting because the materials and the things that go into the cars are in the cyclical sector, but the buying of the cars not so much. So,
right.
If you're looking for an opportunity in something more discretionary, then the automakers was an obvious place to look this week, and we see that Ford, after sort of almost double topping here, not quite, but really trying to make new highs, seeing some negative divergence on the oscillator as it makes a lower high here, and then falling to what really is quite an incredible period of congestion, right? Where there's a lot of buying and selling at these levels. That's where we are again now, but the trend has struggled to maintain the go bars, fell into a few amber go fish, and now the no-go yesterday on a pink bar. Today, obviously, not a lot of movement yet, but in the no-go now with the oscillator well below zero on heavy volume.
Yep. And this is a pretty important decision point, given all of that congestion at this level. We would, without the aid of GoNoGo charts, just looking at this line of support, we'd like to see support be found and see that trend continue higher. Obviously, the composite blend of technical indicators giving us that trend, the coloring of the bars suggesting that we're in a no-go and we've got negative momentum on heavy volume. So let's take a look at another one. How about Home Depot, Alex?
Yes. Yeah, Home Depot. I've really
enjoyed. There's a lot to be said about home improvement, particularly in this inflationary environment. Folks looking to hedge, maybe taking some money out of equity markets and putting it into real assets. And so, how have the home builders performed over the recent week?
Yeah, so I don't know if you lost my audio there. You can still hear me, right?
I sure can.
Okay,
absolutely.
Cool. Yeah, so it's been really fun to watch the home builders, like you said, over the pandemic, really thrived because people were deciding instead of buying new homes or selling, they were putting a lot of money into their houses, and that's changed though. And this is a really great chart of Home Depot showing again that sort of topping out of price, failing to make a new high in this case, on really significant divergence with the oscillator making a much lower high here and then breaking below the zero line on heavy volume, and then the no-go taking effect. Now, my eyes, having looked at a ton of charts, I would wager that the distance from this top to the neckline is fairly equal to the distance from the break to where we found support here. That looks like it's met its first measured move. When you're looking at a pattern like this, the height of the pattern you're looking at, once broken, often becomes the first target. And it looks to me like that target has been hit. If you also look across to the left of the chart, you can see that this support that was found really kind of lines up with the levels of resistance over here on the left. So made a bit of sense to see that bounce over the last few days. But now we're very, very keen to look at the zero line, see if the oscillator finds resistance there. And if it does, price may well find resistance right where it's at, and we'd get one of those no-go trend continuation icons to see if perhaps price could make a leg lower.
Further to the downside. Yeah, that's fantastic. Alex, I love that GoNoGo Charts provides that kind of simplicity, that clean look so that you can keep your eye focused on price and do some of that classical technical analysis that you and I both love from Edwards and McGee and even Charles Dow. Few individual names. We've looked at a few sectors. Let's step back, my fellow inflationista, and take a look at the macro environment. Why don't we pull up TNX? Because we know that the interest rate environment is driving a lot of the rotation that we've seen into cyclical sectors so far in 2022. That the rapid rate at which rates were increasing really shook the markets. So how are we doing this week in terms of a trend perspective on interest rates for the 10-year note?
Yeah, we've had this level on here that we expected to maybe find support at. We saw over the last couple of weeks a break above, a retest, a move higher, and then we saw last week a fall back to this level. And what we can see is that it's held as support. And we can see that price has rallied again here, that we've got a go trend continuation icon as the oscillator seems to be finding support here. So we haven't broken above this high from last week, but we have moved back higher this week. And I know that there was a Fed meeting yesterday that you probably were following, even on vacation. Yes. But I know that they're pricing in some rate hikes, and that's what we're looking at for 2022.
Yeah, Alex and I are not here to speculate about the language used and the particular adjectives that came out of Jay Powell's mouth, but the market was expressing concern last week about the need to be even more aggressive. That if the Fed was to stem inflation, because it has gone on for so long, maybe even pricing in a 50 basis point hike, right? Instead of what was traditionally a 25 basis point increase. But data from the CBOE is telling us we're looking at least 4 rate hikes. The market is anticipating 4 rate hikes through the year, a full percentage higher. And so when interest rates jump like this on the TNX, we know that we're going to see equities markets respond either through rotation, right? Value is not destroyed, but it goes to seek other assets. And so when we saw this dip earlier this week, we know that a flight to safety out of equities into government treasuries is going to pull that back a little bit, stem the rising inflation rate. But certainly yesterday's Fed meeting and the anticipation of those rate hikes here in the first quarter, the end of March, is weighing heavy on the market's mind. Yeah. But let's switch out of interest rates and take a look at the US dollar, which has been a fascinating chart because despite all of this inflation, it had been really persistent through 2021. We finally saw it roll over here at the start of the year, and we're seeing a little bit of a rally, a little pop this week. Talk to us about what's on the chart that catches your eye, Alex.
Yeah, like you said, there's different ways to I guess try to understand what's happening. And you can be stubbornly technical, like I often am, and try not to understand underneath the price action. But I believe that the price action represents what's happening in the markets and the dynamics that are going on underneath. So it's important to try to see what's happening. And there's different ways to read this interest rate hiking or sort of inflationary environment. And that is that in the long term, probably isn't the best for the dollar. But in the short term, with the market pressure that you were just talking about, and you might well have fund managers moving some of their money to cash. So in the short term, you could see a different scenario than you might expect. But what we're looking at from a technical perspective here is that you've had this go trend in place. Like you said, it rolled over into a no-go, and it's rallied strongly now for about 7 or 8 days. Even you see the gap up today on the open. But we're in amber go fish bars now. So it's going to be interesting to see which sort of story or which side of investor opinion takes hold here. We're not in the no-go, but we're in amber go fish bars. So we'll sort of see if the amber leads to a reversal back into the go trend or if it falls back into the no-go. One thing to note down here on the bottom is that the oscillator was able to break out of a building squeeze to the upside. So there is some positive momentum here on this move higher in price for the dollar.
Absolutely. And it's really not about the narrative or understanding what's going on. We know that price is all that pays. And for the last decade at the CMT Association, we've talked a lot about how technical analysis helps navigate that gap between value and price. And we know that there might be diminishing value in US dollars, but frankly, if there is no alternative across the global currencies or with other central banks being even more accommodative or less hawkish, there may not be an alternative. And before we can understand all of that narrative, price is already telling us very clearly what's going on.
And I think we've both heard so many times, right, over our careers, somebody saying, yeah, but it shouldn't do that. It doesn't make sense. And so you're getting a whatever, before whatever technical analysis you're using, you're getting a buy signal. clear as day on your technical process, and somebody doesn't take it because they say it just doesn't make sense. It shouldn't be doing this. And price does what it does until it doesn't. And so, like you said, the story is what it is, but let's look at what the price charts tell us in the immediate, in our immediate analysis.
Absolutely. It's a very expensive activity to try to convince the market that it's wrong. All right, moving right along. We've talked about interest rates. We've talked about the dollar. We know in this inflationary environment and volatility within the U.S. equity space, investors are looking for a safe haven. Alex, let's give them some good news. What has been trending? What has been working? Let's start with the energy sector of the S&P 500, the XLE.
Yeah. It's been on our radar for a while, and energy and its components, oil, really have been a great place for money to be over the last month or so. And this is the XLE Sector Spider Fund, and you can see that actually we've made new highs. So if you are able to have sort of rotated out of some of the growth stuff and you've got something in energy working for you, then actually we're higher than we were last week.
Correct.
And so that's remarkable given the drop in the volatility in the overall market. Yeah, it did come off a bit because of what was happening. When something as volatile as that happens, everything tends to move.
Correlations move to 1 in a crisis.
Look how quickly it's bounced. It didn't even get to the zero line here. We've had heavy volume, and it rallied strongly this week and is actually higher than we were last week. So there's some good news for investors.
Brilliant. And within the energy space, let's look at a couple of individual names. How about Devon? DVN is the ticker symbol. And this went out to all of our subscribers in the Monday morning research report, Flight Path, as an opportunity to perhaps play to the long side, even in a very volatile week.
Right. Yeah. So Devon Energy, similar chart to what we were just looking at with the energy sector itself. But yes, this was sort of, you could have perhaps caught the low here and looked at this as an opportunity to get in. We knew about the rotation to these cyclical sectors. And so when you saw the fall, this movement to weaker aqua bars in the Go trend, but the oscillator finding support then at zero, that's sort of our idea that if we can find that support and the momentum stays in the direction of the trend, then things are looking okay for a security like this. And as you can see, we just made new highs and we're going higher today.
Absolutely beautiful looking chart. The other place that folks are looking in many past historical inflationary environments are looking for a safe haven when markets are particularly volatile is the gold. As an asset class, precious metals have really been nobody's friend throughout 2021. But if we're just looking at a daily chart of, let's say, the GLD, what are we seeing for investors in the short-term play?
Yeah, it's been really, everybody, if you talk to people, even people outside of finance, what's the hedge for a troubled economy or a troubled stock market? People will say gold, and it really hasn't been the case as much, and we really haven't found much direction with gold over the last couple of years.
Yeah.
We struggled again here this week. Gold has taken a bit of a beating over the last few days after making that sort of swing high here. But never say never, right? And we've got the oscillator at zero. And if the markets continue to really struggle, then we could look here to see if support is found on the oscillator and to see if gold finds some support. And gold could move higher. And then we could expect it perhaps to test these prior highs from November. Gold is still something that people will look to. And if we do see those sort of money managers trying to move money out of risky assets like equities, they may put some in cash, like you said earlier, or they may put some in gold. Gold may have its day. And remember, I think the last week we showed the long-term gold chart. And so there is some bullish action on a long-term chart. We're looking at perhaps gold trying to break out of a very, very long-term pattern. So, we'll see.
Absolutely. All that we can say is that right now investors are moving funds towards stores of value, and whether that's capital intensive energy space, we know that the prices are being driven by supply and demand, and so demand for things that have a higher store of value is really the story so far in 2022. Alex, really appreciate you taking time with the GoNoGo charts today. Appreciate everybody who is watching on StockChartsTV.com or here on YouTube. Make sure you subscribe to the StockCharts TV channel and check out the on-demand platform. Fantastic app, and you can take these shows everywhere you go. Alex, until next week, looking forward to seeing you and your fancy guitars. And take care, my friend.
I'll have a different one next week. And thank you for finding the time when you're on the road there. So thanks, Tyler.
Of course. I'll talk to you soon, buddy.
Take care.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.